market is continuing to shift with homes sitting longer, buyer demand backing off, days on the market continuing to rise. And in today's video, I want to talk a little bit about what's happening nationally with regards to the housing market. And then I want to talk more specifically about what's happening here in California. As a real estate agent out there helping buyers, helping sellers in this market, I want to show you what I'm seeing. What properties are selling quickly, which homes are sitting a little bit longer, which homes can you get a deal on? That's what we're going to dive into in today's video. So we just received the most recent existing home sales report that shows that home sales are down 5.4% from last month and down nearly 15% year over year. So what does that mean? That means that there are less homes closing escrow. Why? Well, because of interest rates, because of affordability, because of fear out there, right? There are people that don't want to purchase homes because they believe a crash is coming. In fact, I just did a survey on my channel and 51% of the people that answered the survey said that they believe we're currently in a housing crash. And because of that, we've seen inventory also rise nearly 10% from May and nearly 3% year over year. Now, depending on which market you're in, you've probably seen inventory rise more than that. And we're going to talk about that here in just a minute and how that's also affecting prices and the housing market. And because of that, we've seen inventory rise from 2.5 months of supply last year this time to nearly 3 months of supply currently on the market. Now, before we dive into what's happening here more specifically in California, why are we seeing homes sit on the market longer? Why are we seeing less sales? Well, we started the year with interest rates around 3.4%. We've seen them rise to over 6% since then, which has put a halt on buyer demand, right? Less people being able to afford these properties, therefore less sales actually happening. In addition to that, we have the spring season when more homes are coming on the market, which we just experienced. And now that we're moving into summer, there are going to be less sales happening because of vacation, because the kids are out of school, just because people are out enjoying life and not necessarily looking at property. But let's take a minute here and talk about existing home sales and why you're likely to continue to see numbers get worse as we move throughout the rest of the year. Well, the June numbers just came out, and again, we were down 5.4% from May and nearly 15% year over year. Now, keep in mind, when a home closes in June, that means it probably went under contract sometime in April and May. Well, as you can see from this chart here, interest rates peaked sometime in mid-June based on where we are at the moment. So those buyers that went under contract in April and May likely had a lower interest rate than the peak that we saw over 6%. So as you see July and August home sale reports come out, they're likely going to continue to decline. Why? Because that higher rate, that rate being over 6% for many well-qualified buyers out there, is going to affect affordability, which is going to mean less buyers can actually afford to make that jump, or less buyers actually want to make that jump based on where their payment is. So they've decided to sit out and wait and see what happens with the market. And therefore, home sales are going to continue to decline, which means that inventory is likely to continue building. Now, more specifically here in California, we actually saw home sales decline more significantly than we did across the United States at 8.4% month over month and nearly 21% year over year. So significantly homes selling right now this time of year than last year this time. Why? Primarily due to interest rates, as we mentioned earlier, which has caused home sales to be down nearly 11% year to date. So we're selling way less homes this year than we did last year because of that rise in rates. And because of that, active listings climbed to the highest number that we've seen since June of 2019, climbing nearly 30% from May, month over month. In fact, we saw 46 of the 51 counties here in California record higher active listings this time of year than last year. In fact, 9 of the counties here in California recorded triple-digit gains year over year with the number of active listings. Yolo, Solano, Merced counties saw increases of over 120% with regards to inventory. So what does all of this mean for you as a buyer or seller out there in the market right now? Is the housing market crashing? The The answer is no, but it is decelerating. Home prices are stabilizing. In some markets, they are going down. There are less buyers out there looking for property. Why? Because of home prices rising like they have been, interest rates being, in the high fives at the moment, affects affordability. That means there are less buyers out there. In addition to that, you have people that have sold that are sitting on the sidelines waiting for this crash to happen, and therefore there's just less demand in the market. On top of that, it's the time of the year, the seasonality. We're going back to times before the pandemic. I know everybody has a really short memory and wants to think about, the last 2 years of craziness in the housing market, home selling way above the asking price, having to waive everything, and the fact that that's slowing down. It's as if the world is ending, when in fact, that's not the case at all. We're just getting back to what the market used to be prior to the pandemic, with an increase in inventory, with less buyer demand out there, which is giving more stabilization to the market. Now, will we see further declines in home prices? There's a chance. There's an opportunity out there. If you have a seller that is fearful, that needs to sell their property, they might be in a position to take a price cut less than what the home might actually be worth in this market. But what you're seeing more so than anything else is days on the market go up. And because days on the market are rising, homes are sitting up a little bit longer, you've got buyers looking at the market saying, see, this is exactly what I'm talking about. This is the beginning of a crash because homes are sitting on the market longer. Well, this is normal. It's not normal to sell a property in a couple of days, which is what we saw over the last 2 years. So as days on the market rise, sellers are going to have to adjust their prices. In many markets, they're going to have to be more reasonable in what they're requesting. That's why here locally in Orange County, where I'm located, we've seen inventory rise. Today, we're sitting at about 3,995 homes. That's a 35% increase from this time last year, but still well below the 3-year average prior to the pandemic from 2017 to 2019, when we had around 6,700 homes on the market. So we have more property building, but we still have significantly less than we did that time. But here in Orange County, we've seen the days on the market rise to around 67, 70 days or so on average for the county. Now, keep in mind, the reason part of those days on the market are rising is because there's less demand out there, but you also have to take into account there are many luxury homes here in Orange County that are well over $5-10 million, and those homes tend to sit on the market longer anyway, and that is gradually going to continue to pull days on the market up. Nevertheless, days on the market are rising, and what that means is that it's becoming less of a seller's market. It's still a seller's market out there, which means as a buyer, it's going to be hard to come in and offer significantly less on a property. But at the same time, whereas a couple of months ago, you had to waive appraisal contingency, you had to waive, everything and go well above the asking price. As it becomes less of a seller's market, which we're currently sitting in at the moment, we're in a slight seller's market. That means in most cases, you're not going to have to do the craziness like waiving everything, and going in super aggressive on many of these offers. Now, what I will talk about here in just a minute is what I'm seeing out there as an agent, which properties are selling quickly and which properties are sitting a little bit longer, which properties you might be able to get a deal on. But before we do that, I'd like to take a minute and ask a favor. If you find any value in my content at all, hit the thumbs up, turn on the bell notifications, subscribe to the channel to stay updated on everything real estate related. And if you're here in Southern California, in Orange County, where I'm located, I put a link in the description of this video where if you want updated stats, if you want a newsletter to actually tell you what is going on here, backed by numbers, do me a favor, fill that out. I'm happy to put you on a newsletter list where you'll get that information directly every time I receive it, and that way you can keep up to date with everything that's going on. Now let's take a minute and talk about what's selling right now. What homes are still getting a premium price? Which homes are sitting? Well, over the last couple of weeks, what I've noticed is that homes in inferior locations, those homes that, back to freeways, back to major streets, those homes that need a lot of work, that aren't the newly remodeled homes. Maybe they're nice properties, but they're just not up to date with today's grays and whites, the quartz countertops, the light flooring. Maybe it's a property that has dark flooring, more of a Tuscan style. Those homes are sitting on the market a little bit longer. Why? Because there's less buyers out there in general, and then there's less buyers out there that want that style, that taste of property. Because things change over time and styles change and the cost to remodel has gone up considerably, more people want to buy a property that's already redone, right? And many buyers out there don't have the money to do a remodel after buying that property. So they want to buy a property that already has the taste that they're looking for. And so the homes that don't have that or are in inferior locations, like we mentioned a moment ago, those homes are sitting a little bit longer. Those days on the market are going to continue to rise, along with homes that are priced incorrectly, that are priced too high. And those are the homes that, if you're trying to get aggressive with regards to your offer, those are the homes that you can be a little bit more aggressive on. Now, that only works if the seller has to sell or if the seller is in a fearful or desperate position. So don't go in expecting those deals to happen just because they've been sitting on the market a little bit longer, but you have a better opportunity to get those accepted. Now, on the other hand, the properties that have been recently remodeled are newer, have the grays and whites, the quartz countertops, even new construction here in Orange County. In fact, I just put an offer in on a property this last week that was listed at $1.2 million. Well, we went in at $1.2 million. We kept our contingencies in place, but we shortened things. We made an aggressive offer. Well, there ended up being multiple offers. One of the other offers was a cash offer. So we got a counter back at $1,250,000, $50,000 higher than their original asking price and $50,000 higher than we originally offered on that property. Now, one thing I forgot to mention a moment ago is we gave that seller, or we were willing to give that seller, a 30-day free rent back. So my clients were going to allow them to stay in the property for 30 days. Well, part of their counteroffer is that they wanted 60-day rent back on top of the $50,000 higher on that property. Now, in this case, my clients loved the property and decided to move forward with their counteroffer. Guess what? Our offer didn't get accepted. Why? Because the cash offer also accepted that terms, and the cash offer was more appealing to the seller. So the seller ended up taking that cash offer. Now keep in mind, there was a model match to this property that sold back in February at $1,270,000. Now I looked at that comp and said, well, that was February. Interest rates were lower then, so buyer demand was a little bit higher. Since then, interest rates have risen. I don't expect the property to sell for that 1.27, but I also didn't expect 3 offers on this property within the first couple of days. I thought the market had calmed a little bit. At $1.2 million, you'll just have less buyers out there looking for it. In many ways, maybe that was true. Maybe, 6 months ago, there would have been 10 offers on the property instead of 3. Nevertheless, homes that are priced correctly, maybe even a little bit less than where they should be, homes that are remodeled to today's taste, those homes are likely going to continue to move. So if you're a buyer out there, just keep that in mind. And with all of that said, just keep in mind the market is continuing to shift. More inventory is going to come to the market, but as we move to the fall, you're likely to see inventory kind of stall a little bit. At the same time, you're likely to see buyer demand stall just because it's that time of the year. Now, there's a lot of unknowns out there with regards to interest rate, what the Fed is going to do, where the inflation numbers are going to come out next month, how aggressive they're going to be, and that could affect interest rates. If interest rates improve, you might see the market pick up a little bit. If interest rates get worse, you're likely to see the market continue to decline further. If they stabilize, if this is kind of where they're going to be for some period of time, you're likely to see the market continue to do what it's doing, but with more inventory out there and days on the market continuing to rise. So just make sure if you're a buyer out there, you're buying for the right reasons. You have that longer term time horizon to allow any potential bumps in the road. But if you want to know my thoughts on the housing market, how they've changed, do me a favor, check out this video here. I dive into it in more detail. But for now, I appreciate you taking the time to watch. I appreciate your support. Hope to see you again soon. Have a great day. Bye-bye.